Because the government gives generous tax relief on the money you put into your Sipp or any other pension, it sets a limit on the amount you can pay in and still get tax relief each year. The maximum contribution you can make depends primarily on what you earn. The basic rule is that you can put in up to 100% of your earnings each year, but that's capped at £40,000. Now, for most people, that's the only rule that's relevant because they won't get anywhere near that sort of sum each year. But high earners are basically given less generous pension treatment. So if you have total taxable income of more than £150,000, that's including investment income as well as your salary, then your annual allowance is tapered. For every £2 of income you earn over that £150,000, the allowance is cut by £1. If you receive income of £210,000 or more, you'll only be able to put the minimum £10,000 of contributions with tax relief each year. This taper system was only introduced in 2016 and it's been very heavily criticised, particularly because of the troubles it's caused for NHS staff, particularly for senior doctors. The government has now announced that it's going to review the taper for the likes of the NHS, though not at present for all high earners. Importantly, if you reach the age of 55 and start taking taxable income from your pension, so that's over and above your 25% tax-free allowance, then your annual allowance is slashed from £40,000 down to just £4,000. That's known as the Money Purchase Annual Allowance, or MPAA, and it's there to stop people recycling their pension by drawing money out, claiming the tax-free cash, and then reinvesting and claiming more tax relief. The MPAA could make it much harder to build your pension pot if you're, for example, you stop work, you need to get some income to tide you over, and then you start work again once you're 55 and you want to build your pension back up. It will limit the amount you can put in to just £4,000 a year.